You have been taking your take profits wrong. If you were to take this trade in this example, you would target the structure for a 5R, and even though you ended up being right because the price went there, you ended up being left with a break even or stop loss just beforehand. So I don't know about you, I don't mind being wrong, but I do mind how my account is looking at the end of the month. So instead of going for structured TPs, let's say you go for a fixed risk reward. And this example, if you were to trade a risk reward of 3, you would have been left with a TP here, and then because the price comes back, you have a re-entry because here we have a sweep of London. We have New York sweeping London, and then it's also London close. Nice for the trade another day, and you get another win. Whereas with the structure, you would have been left with a stop loss, and because it is a stop loss, maybe you don't re-enter. Maybe you do re-enter. Maybe you didn't even take this. But either way, like if you do the math, this example has a total of 6R. If you were to be tagged out here on break even, you would have been left with either 0. If you retook it, then you would have been left with a 5. If you take a loss here and then took a win, you would have been left with a 4, right? And this example is always beating. Now, of course, there's examples where the structure is always going to beat the fixed risk reward, but here are the cons for the structural TPs. First is going to be an expectancy on your returns, because an average risk reward, it's a valid point. It's a valid point to use structural take profits, but it gets a bit confusing and you don't necessarily know what your next win will be. Whereas with a simple 50% win rate and a 2 risk reward, you would have known right at the bat, if you can do math, that's profitable. It becomes simple because if you're in drawdown, you know that your next trade, if it's a winner, can cover for the losses. If it's the structural point, then maybe yes, maybe not. Now, another point for the edge, your decision making. What structure do you actually take? Do you take, in this example, structure number 1, that's internal? Do you take structure number 2, that's external? If you're always mixing, then you might confuse the edge. And even though you can be profitable, we can always optimize. Because look, it doesn't matter if you're currently profitable, there's always improvement that can be made. Even more importantly, if you just have an edge to the slightest, right? Let's say you have a 1 risk reward and you go for a 51% win rate. That's just that 1% win rate that's saving you, right? And even though that's profitable, it's not the best. It's going to depend on your trade frequency, but it's not that big. And we also got to keep in mind of the psychology factor, which may always not represent our fullest data. So look, if you got both independently tested, that's good. We're always looking to optimize. But the most important point that I want to go over is the risk to reward if you're in drawdown. So if you take the structural TPs, will they still be mechanic if you're in drawdown? I want you to ask yourself this, because are you just going to place the TP on the structure, or are you going to be a bit more greedy to turn that TP into a 6, 7, 10R, right? Because I'm going to tell you, with a fixed risk reward, the TP setting is mechanical. If I'm in drawdown, I go for a TP of 3 either way. The only time I change it is when I'm, for example, in a challenge and I want to do a challenge pass in one single trade. But it's still according to the plan, and I'm going to show you that later. But regardless of the account P&L, I know that if I'm -4 on the account, I know that the next win will put me at -1. This is a very crucial point, because I know a lot of guys that be on a spiral of just losing. Because let's say you take your first trade, and all right, it's a loser, but it's conform to the plan. The account was at 0, you were taking it seriously, and it ended up being a losing. All right? Then you take another trade, but this one was a bit out of the plan because a negative P&L played an effect, right? Because we don't like to see the account at minus, or instead of being 100K at 99 point something. Now you go over the third trade, and you lose it because you're trying to make back all the losses that you've taken, because you're not applying the same plan as the data tells you to do. So you're essentially doing another thing opposed to the data and expecting the same result, which will not happen. The fourth trade, it could have been a TP, but you're being greedy, so then boom, another loss. The fifth trade is absolute dog shit. You're just going on a run. So You see how this goes. You take one trade, then you're trying to make it back, then you're trying to make it back, then you're trying to make it back. Because why do you need a 10-hour trade? Why do you need a 10-hour trade? Maybe you need a big risk reward like this because you already took so many bullshit, then you're just trying to make it all back. Whereas if you take it the nice route right at the bat, you would have been on the profitable side. In my free community, sometimes I see guys smashing it, absolutely smashing it with a 5-hour trade here, 10-hour trade there. And I'm like, yo, these are some serious profits, bro. You taking this on the funded, on the challenge, you passed it. No, I'm still on the challenge. And I'm like, how are you still on the challenge after making 15R? These guys are trading challenges, but it's like they're going for the absolute moon. Like, how is it possible that you're looking for a 10-hour trade if you're in a challenge? And that's why, because you're at minus 7%, minus 8% on the account, right? So stop doing this, because you might be profitable with your own plan, but that doesn't mean that will reflect on 10 hours, 5-hour trades, because you didn't test that. It comes to the same point I was making it earlier about expecting the same outcome by doing different stuff. You already know that makes no sense. Now, because I'm telling you to go to a fixed risk reward rather than a structural one, this does not mean you can disregard structure. I still look at structure when I position myself. Because let's take an example. I take a risk reward of 3. And now you're thinking, oh, Dylan told me to put a risk reward of 3. My stop loss is huge. Let me target the moon. Right? This is H1. You can see how ridiculous this is. Because I know as soon as we break this structure right here, there will be a reaction. That reaction might be small, and then we might continue. Or that reaction can be big and take me out. And so what I mean about thinking of the structure, let's just go to the lower time frames here. Let's say I'm looking for the same high, the same structure to get hit. Okay, I'm gonna draw a line on it. Let's say here, I had my setup after we sweep these two liquidities, Asia, then we do like a double breaker structure, let's say. And I put my stop loss under the definite lows. And if I go for a 3 risk reward, this trade doesn't make much sense. Because after the structure, right, it only gives me about 1.8. Okay? And if I were to go on a 3, that's being too greedy because I know price will go here. I know price will go here, right? But then I don't know what might happen from here. All right, but I know price will go here and it will deliver a reaction. The reaction can be small, can be huge. So my mindset once it comes to these is either I gotta disregard the trade completely if the risk reward makes no sense, or I gotta optimize it in a way where I could have the 3 being hit right here. That means either getting a better entry or reducing a stop loss to where it can be valid, right? If this low has already tested, maybe I could have taken here, and then the 3 is still a bit greedy. It's still a bit greedy, okay? If we were to be only a bit up, then I'm cool with it, because I know the structure will get hit and we will surpass it a bit just to take out everyone and their stop losses. They might be slightly above, and this would have been cool. But this only brings me a 2.5. Maybe I would have taken it. Maybe I would have just said, okay, I'll take it just for the risk because it still looks good. Or I might optimize the entry somehow, have the stop loss at fine lows, or both, right? And you can see 3.26, sorry, at the other highs, but here it's already 3R. It's already 3R to the T, to the structure, and it's perfect. But we can have the scenario of maybe, let's say we take this structure right here, until the structure is 4R, but that doesn't mean I'm going to target the 4R. Doesn't mean because I'm sure we'll go here that I'll target the 4R. I'll just go for the 3 the same way. Like I was saying, perhaps if I'm in a challenge and I'm going for a challenge pass, I'll upgrade the risk and the risk reward in order to go for the structure here for a 4R. Let's say you need 8% to pass a challenge. I'll do 2% risk with a 4R, that's 8, right? And then I'll pass the challenge if the structure get hit. But if I'm unfunded, I'm not playing around, I'm doing my edge, which is 3R, and to go to this level, which in a way you can argue, why wouldn't you just target the structure? Because I'm with you on that. I'm with you, because if we go here, we're most likely gonna go there as well. And you're totally correct. But the amount of times that I've seen price playing around, for example, going here to where it would have been your TP, your 3R, and then coming back lower, I mean, it's a lot of times. It's a lot of times. And we do as the plan says, okay? And a perfect example of this situation is GU lately. Look at this chart on GU, okay? Let's say me and another trader, we are both looking at this high. We know we will get hit, right? But it does so much playing around here on the liquidities underneath that the guy would have been trying to buy here, stop loss. Buy here, stop loss. Buy here, stop loss. Buy here, TP. Maybe he would have got the TP. Maybe he would have got his like 5R out here. But what is your 5R if you took like 4 or 5 losses just before? Maybe you're on the profitable side, but even then we can always optimize it, right? Whereas someone like me who would have fixed risk reward, he might have gotten some stop loss, maybe some take profits of 3 around this level, but definitely way more. Because look, this is my group, and on the 8th of December, I was already telling, look at the amount of reactions GU is giving on these lows, right? If we go down, we might have a reaction. And it's always about that. It's always about the reaction. Alright, I don't need to be super right and go for the 30R, right? That would be good, but I couldn't care less about having a perfect entry, a 10 risk reward, a 20R. That's good to flex, that's good on the charts, but I care more about the money that comes into my bank account. And look, sometimes I tell my students, hey, if we're wrong on price going higher, that's good. Because if it goes lower, then it gives us more chances to try more times. This guy would have tried more times for the structure and he would have gotten multiple stop losses. I get more tries, I get more chances of leaving with multiple 3R trades. Also this short, that's the win. It's a bit more than 3 and it's to the structure. I think I was doing some challenge pass, but I think I went on late. Yeah, I said right here, sell GU, I was waiting for a U and missed this, and then as you can see the price just went without me. That's why I positioned myself on stop orders, because yeah, it's very easy to miss this as soon as you predict the absolute reversals of the market. Then you also have some losses, I think. No. No, I'm thinking better myself, this is a TV. But yeah, we did try sometimes. Right here, buy GU. This one didn't move as much. It was a break even. Yeah, this was the one I called it out. This stop loss was a bit too huge for me, 17.8 pips. But I knew it was conflict to the structure, so I took it and I took my 3R. Because here, we're going from one liquidity to another. Because this was a trap, I knew that this level would have become a trap. This short right here was a bit of an aggressive trade that my student took. This one, I think I took it on London close for the retracement. Again, to take out this, which I was right. But because the liquidity was up there and you had this structure as well, I went for the 3. I went for the 3, and as you can see here in this example, right, I was taking out break even either way beforehand, but we did go to my liquidity. We did go to my liquidity, but then, I mean, I wouldn't be left with a take profit hit because my take profit was right here and the price only reached this point. So then, price could have taken me out break even later if it didn't had so right here. Which goes back to the first point I made in this video. You might be right, but you might be completely wrong on your pockets, on your account P&L, which is a way more important metric. Because I can tell you, For the most of my journey, I was always right about the charts. But if you don't apply it, if you're not a mechanical trader, if you don't actually position the trade, if you don't actually exit at the points you think the market will go to, or you be conservative, you might not be a profitable trader. Now, I hope you took value out of this video. If you don't agree with me, feel free to share your opinion in the comments. All right, constructive criticism only, please. I'm cool with all the hating stuff, but at least come with some substance. All right, don't just tell me after I said 2 + 2 is 4, don't tell me the math ain't mathing. All right, don't be that guy. If you like the video, give it a thumbs up, subscribe, and I'll see you on the next one, boys. Thank you for watching.